Hello YouTubers, and welcome to another episode of Frugal Finance. Sorry I've been a little bit sparse on the old video updates of late. We've been a tad busy, and I've also been trying to work on my fitness a little bit. So what I wanted to have a quick overview of today was the general portfolio on Trading 212, see how fit it's looking, so to speak, because that seems to be the order of the day at the moment. We'll just flip on over to that, but before we do that, please do not forget to hit the like button down below. That lets YouTube know that you like the video, and the algorithm then hopefully will pump it to other people. And if you could subscribe at the same time, that would be good, because then you won't miss any of the future videos. I'm going to try and post a bit more regularly, whilst also trying to work on my fitness. So I will give you a quick overview shortly after I have jogged or walked pacely, I would say, up this hill. I'm working on it, trying to get fitter. Let's get stuck in. So here we are, we'll just flip on over to the main Trading 212 portfolio. So a quick update on the non-ISA side of it, where I've got NEO here. They fluctuated a little bit over the last month or so. Basically they were up a little bit, and then they're back down, and then they were up. They're like a bit of a roller coaster at the moment. But positive news is it's nice to see that finally it's actually in the green. I have been dollar cost averaging down my position in there, as you can see, around about £31 or £31.56 per share average buy price. That has allowed me to, relatively speaking, pretty much break even on the investment there. I haven't put any more in there because I have been concentrating primarily on really just focusing on trying to use up my ISA allowance as best possible and make sensible investments over here. As you will see, the market has been pretty turmoil in the last couple of weeks since I last posted. I think it was about 9% return. We're down to about 3.5% now. We had things like Apple up at about 15%. American Express was up as well. And they're all down now. Not down to me personally, but down in terms of the portfolio overall, really. And then we've got the things like Coinbase, which have pretty much stayed static. It's a relatively new investment. I can't remember if that was in the last video or not. And then Lucid Group, which was obviously CCIV before, that got up to about 40% return for me at one stage. Now down at just under 2%. So you can see, whilst we had a bit of a rally on things, generally speaking, stuff has just sort of returned back down. I made a small investment in Robinhood, who's a bit like a sort of American version of Trading 212, although it's a bit controversial of late, on IPO date. I don't know whether that will do any good even long term, but we'll see. But I've only got a small position in that, just to really stick my foot in the door. Square's not been doing too bad. Some other investments in Stag Industrial and in Realty Income. I've put some further funds in there. Uber, I've been trying to dollar cost average my way down, pound cost average my way down into them. And Tesla's been returning all right. That's around about 9%. So as you can see, the overall portfolio sits at a little over £16,000, of which out of that, in the pies feature, we've got about £4,200 in there, and that has given us about 3% return, very similar, but that's held stable of late. You can see total dividends gained today are 40 odd pound. I did get a reasonable sized dividend from one company, because they did a stock split share, and I think, without reading it too much, I believe it was probably not beneficial to the shareholders in this FAMMG group, and to make up for that, they essentially issued a rather large dividend, which kind of wiped out the losses. Obviously, it's a little problematic for me to put the actual dividend payment, which was about £20 from FAMMG Group, directly into it, without it kind of splitting across all of the various other companies in the pie because of the way the dividend reinvestment feature works. So hopefully that's a nice little update for you. I haven't gone too mad into things. The other portfolio, Vanguard, that I've got is doing pretty well. I've been just buying S&P 500 and so on. There's a regular basis to that. So that's plodding along okay, around about 12% return, but that's much more long-term hold for me. So obviously it's weathered the storm a bit better. As you can see, I put some S&P 500 into this portfolio, and I'm slightly down at it at the moment. Bearing in mind my other portfolio, I was buying that through the pandemic, so we were paying around £40 per share. Some were 45, but bearing in mind it's now 60, you can imagine there's a reasonably healthy return on that. Anyway, hope that's useful to you. If you do like the video, please do hit the thumb button, like button, even the little thumb, that is the like button, same thing. And don't forget to subscribe, comment below, be interested to see what everyone else is doing, and I'll try and do some other videos. Cheers, bye.